never had those days. I'm sure you get that.
Good morning, everyone.
No, microphone.
Yes, microphone. Okay, good morning, everyone. Thank you for coming. It's so nice to see such a great turnout. Before we begin the actual presentation, I'd like to go over just a little bit of housekeeping. Basically, I want to thank our co-host, Bob with Wells Fargo, and the account manager, Susan, as well. And we also have Scott with Wells Fargo as well, so thank you. Dale with the Jenkins Agency, thank you, Dale, for supporting us today. And we also have one weekend, Dave Byram and Kenny Smith. So I want to thank our hosts and presenters today. I also need to say a big thank you to the SORM associates who assisted with preparing it, all the resources and everything today. Kyle Howard. John Airy, Neil Cook, Judy Palmer, Barbara Klein. Thank you all for your help and preparation. Want to let you know that there's a sign-in sheet out front. If you did not sign in, please do so. That's important for us. You can also pick up a raffle ticket. We'll be raffling off just some door prizes. We also, let's see here, the bathrooms are around the corner to the left side, right out the store. There's some signs there on the left side, so just follow those. I also want to let you know that this presentation all day today, all of our presenters, we really want to encourage your participation. We want to encourage your questions. This is supposed to be an informative presentation, so there's going to be a lot of discussion going on. So if you don't have your presentation, feel free to raise your hand, ask the questions, because of you, we have a program, and because of the needs that you have and the inquiries you bring us, that's how we learn, that's how we grow, that's how we improve. So you are very important to us and to this program, and we appreciate that everything that you all do and every opportunity you present to us. So please feel free to ask any questions that you might have. I would like to give Mr. Director Andres Campo an opportunity to say a few words. I have really enjoyed being part of the risk management team, and under his leadership, we are just making a lot of innovations and doing a lot of really great things for the state.
Thank you, Christy, and thank you everybody for coming. It's great to see a lot of old faces and new faces that are going to be. Fortunately, I can't be on the field to visit all of you to the extent that everybody else in SORM event. But if you don't mind, SORM employees, if you can stand so I can introduce you, just in case somebody is visiting this office, this meeting don't know who you are. We have Kyle Howard over here. He's our administrative assistant. Does a great job of us all on task and everything going. Scott Olson, one of our risk management specialists. He's relatively new, so some of you may be working with him in the future if you haven't met him already. We have Judy Palmer, one of our training specialists. Christine Wright, she's one of our risk management specialists. She's relatively new as well. So hopefully you'll have a chance to meet her too. Barbara Klein in the back, the chief of legal services, the State Office of Risk Management. And also we have Lisa Bell here to my right. She's been around a while and she's very good at what she does, and a lot of with her over the years. So that's Lisa. And of course we have Stephen here. Over the past few years that she's been working at SORM, she has done a lot to grow and to improve the insurance services that SORM provides. Those of you who work with her directly probably observe, but those of you who haven't, I'll let you know. She has worked diligently with underwriters, brokers, vendors, and the client agencies to, ensure that they can get the coverages that they need, or to resolve a dispute between the client and the underwriter. So she's been diligently working and improving the SORM services. Now, unfortunately, she'll be leaving us shortly. She got a job offer at the teacher retirement system, so she'll be working there. And on behalf of the State Office of Risk Management, I'd like to thank you for all the work that you've done. Wish you all the best.
good, I'd like to start just with the raffle. Get some winners out there real quick. Okay, so coupon ticket number 793718. You are our first winner of the day. I'll do another one so she won't be lonely. Let's see, ticket number 793729.
Bingo!
All right, winner, chicken dinner. So we'll be giving away just a little knick-knack back every break or so. We'll be giving a couple of those away. Okay. I've presented for it. I don't think I've had a group that's quite this size, so bear with me. All right, let's get the show on the road. That's the projector, thank you. Okay, so obviously we're here to present the Statewide Automobile Insurance Program. And what I'm going to do is just basically give you an overview, kind of help you understand basically how the program works from the outside in, you know, a holistic overview. So again, if you have questions, please let me know. I want to start out by identifying what risk exposure is. You know, some people really don't, I know all of you are risk professionals in here, or professionals to some degree, and probably you all bring something to the table. Every one of us has different life experiences and different things that we contribute. So based on your life experiences and things that have happened to you, what you see, you might have a different tolerance for risk. You might have a different idea of what risk is. What's risky for me may not be risky for you. But when you think about it from we're looking at it from all different aspects. You're looking at it, you know, from the holistic point of view. You want to identify that what risks are the qualified potential for loss that might occur as a result of some activity or event. So what activities, or I mean, it could be anything. You took a risk driving here today to this event. We know that state agencies have business operations that put our employees out on the road. They put our state assets out on the road. So because of that, it creates an exposure. We have an opportunity for a loss to occur. And when we go and meet with the state agencies, and I say we, I'm talking about our service team, our risk managers. We share this information on a regular basis, whether you ask us to or not. We're constantly, letting you know what's going on and letting you know what we have to offer, because we're a service agency, and that's what we do, and we serve you. And that's our drive, that's our motive. We're one of very few agencies that is only for servicing and not necessarily a regulatory agency. So we try to educate as much as possible. However, when we run up against agencies who may not be aware of things, we get responses. I think it needs new batteries.
You have to hold your tongue there.
Okay. So these are some of the responses that we get. And this may be familiar to you. You may have thought this at one point yourself. The state has immunity. We can't be held liable for anything. Well, actually,
that's not entirely true. Here's why.
So the Texas Tort Claims Act waives sovereign immunity, but it does allow for some limited liability with motorized vehicle operations. And we're, of course, going to have a panel discussion about that. So I hope you all are generating questions and concerns for to be be answered. A lot of the response that we get when we talk about what they can do about the risk and what they can do about the exposure, they say the state's self-insured. We don't need to purchase insurance. We don't need to join a program. We're self-insured. Well, my response is, where? Show me in your budget, show me where that line item is where you are putting away money on a regular basis in order to pay these claims, in order to fix the state vehicles that are being damaged, in order to, basically indemnify any third party who is holding you liable. Now, we did have a meeting with an OAG representative not too long ago regarding how the claims are handled on their level, because everyone knows that as a state agency you have representation from the OAG. And it was very interesting because they process their own claims for those of you who are not in our program. Some of the state agencies just assume that the OAG pays those claims out of their budget, but in fact, any claims that are paid actually come back to the state agencies. So I know we've heard different things from state agencies, and that may be misunderstanding, but any time that there's any liability claims paid out by the OAG after they defend and represent and so forth, all of those fees are charged. So now you're looking at, a big loss event possibly that you can budget for. Let's see, one more time. Financial planning is about structuring known exposures to the risk factors. So even though you all may not be financial planners, as risk professionals, whatever it is that you do in your agency, you probably have an impact on the decisions that are made, on the ability to identify risk, identify exposure, and so you doing your part in due diligence and understanding what's available to you, understanding the risk, understanding your exposure, all of those things will contribute to your agency's ability to make the best decisions in order to safeguard your assets. I liked this quote from Ellen. I was hoping to get a joke instead of a quote, but this works well for this. So when you take risks, you learn that there will be times when you succeed and there will be times when you fail. And both are equally important. And I think that that's very relative to what we're talking about today, because you learn from your mistakes, you learn from maybe a decision you made that didn't turn out quite like you thought it would. And unfortunately, the way that risk is, it's unpredictable, it's unknown. So it's hard to plan for things that you don't know. That's why it's important for you to educate yourself. That's why it's important for you to come to events like this so that you can learn about what's available. So that's just some food for thought. It is a team effort, like I mentioned, at each and every agency. And everything you do could contribute to making the proper decisions. So moving forward, the State Office of Risk Management has the authority to basically administer insurance programs. You all are familiar with we do workers' compensation, but it's so much more than that. I work with a great group of people. They all have tremendous knowledge and skill set and experiences, and they're from different parts of the United States. We have some from out of state that have come on board, and sharing all of those experiences, sharing what they know about risk even in other states, has helped our department to grow and be creative and just really have a comprehensive view on how we are going to assist state agencies manage their risks. Okay. Oh, so it's user error. All right. So SORM basically developed the Statewide Automobile Insurance Program as a response to the liability exposure presented by the Texas Claims Act. That was how it was initiated. It serves as a mechanism to finance risk. And it really represents the purchasing power that the state has. Our program is a business policy form, if any of y'all are familiar with insurance policies, but it's very unique to the state. There is, when I came over from the private sector and I saw the rates and the exposures that were being covered, I was a little bit shell-shocked, because there's nowhere in the private sector that I could ever come close to issuing any kind of risk for the rates that are available with this program. So I was impressed and intrigued, and that forced me to basically look at all the underwriting guidelines and look at, read the policy and how could this be? It was too good to be true, and I just questioned it like nobody's business. And I know I gave you a hard time, Bob. I know I did. Because it was just really unbelievable to me that that we could even have the purchasing power. I understand this, but it really was remarkable. And I know that from a public point of view, I may not be aware of what the market is really like for the private sector, but me transitioning over, I was very aware of it, and so I can't tell you enough how good of a program this really is. It also allows for control. And when I say control, I'm talking about all of the things that go into establishing the program. We control the risk because we offer risk management services. We control the coverage because we're able to negotiate with our carriers. We control the processes because we're constantly, reviewing it for quality and assuring that things are going well. When they're not, we change them. And so it's a constant process, it's a constant circle, and it takes a lot of people to make the wheel spin. We do a comprehensive service team. It's made up with both state employees as well as our partners in crime here. This looks like our Monday morning meeting. Every Monday, the risk management department gets together. We also invite other departments within SORM. Sometimes we have a workers' compensation representative. Sometimes we have even an accounting representative. We invite anyone who is willing to come and share their information and hear our information. And that allows us to, again, pull from different resources, different educational backgrounds, different experiences, and we develop risk mitigation strategies that might be unique for your risk. And so every time one of these guys goes out to see you, they bring back information to us, and we share it, and that's how we're able to really move the program along and really cover some of those unique risks and mitigate different types of loss exposures. These are basically all of the services that are supporting this program. SORM for workers' compensation. You know that we have risk management services. We have the insurance services, which is growing exponentially. Our leadership team is really making it a focus now. So there's a lot of efforts that are going into that division. Business continuity is another division that's really launching, and I'm sure you all have heard a lot about that. And we have legal support as well as training. All of these facets here are the components, and we have representatives from all of them that assist us in developing our insurance programs. Our professional consulting teams, those are going to be our insurance brokers. We have Wells Fargo and the Jenkins Agency. Wells Fargo is responsible for the commercial auto portion of it, and the Jenkins Agency is responsible for the Mexican auto. Our insurance carriers, that's One Beacon Governmental Risk and ABA Seguros for the Mexican insurance. So just real quick, I get asked this all the time when I talk to state agencies. They still call our insurance company Wells Fargo. So I want you all to understand the relationship. So the SORM, SORM and then Wells Fargo is our broker. So we work together. We tell the broker what the exposures are. We've got state agencies with golf carts. We've got state agencies with all different kinds of exposures, and we bring it to him, and he basically gets with One Beacon, and then they determine how they're able to meet our needs, is the bottom line. So now, One Beacon pays your claims. So that's the most important thing you need to know about them, is that these are the guys that pay the claims. Any questions about that? This is just kind of a little visual. Got the state, which represents all of you. State Office of Risk Management, of course, we're kind of heading up the entire program. And then branching out to Wells Fargo and the Jenkins agency, and then kind of completes the circle there. Okay, I'm going to let Bob speak for just a moment about his role, just to make sure that it's clear. Even though that he is a broker within one of our programs, we often have unique exposures and risks that might be outside of our line of insurance. And so the relationship that we have with our existing brokers gives them basically an opportunity to meet any of your needs that fall outside of our program as well. So I don't know if y'all are familiar with the SORM 201 process, if you have other insurance needs, but we typically will utilize our existing brokers for lines that we don't support with our insurance programs.
Thanks, Christy. You've done a great job of positioning us in the relationship with the state. Our role, we're the agent. We bring market access. We're licensed to provide commercial auto insurance for public sector business, private sector business. This is a public sector account. We have relationships with public sector insurance companies that specialize in public sector risks. Christy mentioned how surprised she was at the rates that she found the program had. Well, you can't go to certain carriers and obtain those rates that don't specialize in public sector business. One Beacon, Dick Byron, Kenny Smith, their underwriters, their whole company specializes in governmental risks. So in 2009, when SORM issued an RFP for the state auto program, I partnered with One Beacon to bring a solution to the state that at that time was the best on the table. And so we really appreciate the partnership with SORM to grow the program and to be selected as the agent for the program. So we're licensed to write business as an agent. And again, we specialize in the writing of governmental risks in public sector businesses. We provide services. Christy touched on several of them, but we provide claims advocacy. So while One Beacon has a claims department, in certain cases we have to insert some claims consulting, maybe claims pressure, to help One Beacon and SORM understand and kind of get everybody talking and get that claim down the path where it can settle appropriately and fairly. We provide loss prevention. Scott Bellamy, who's in the back table there with Andres, Scott champions the loss prevention efforts for Wells Fargo for the SORM program. So we assist the state. The state has a very robust loss prevention program, so not very needy, but when they have a need, they have a specialized need from a loss prevention standpoint. Christy reached out to me, I reached out to Scott, and we got things rolling. State training, again, that falls back on Scott, his responsibilities. We offer an online training summit, online trainings, over 120 safety-related, OSHA-based safety trainings. And Scott will get into that a little bit later in the presentation, but it's a great way to disseminate plans and safety training across your platforms and enterprise. Program marketing, well, that's what we did in 09. Okay, so SORM challenged all the brokers out in the marketplace to bring the best solution to the table. So we brought the best program we thought, and of course it was accepted by SORM in 09. We don't accept this again in 2014 as our issue. But again, program marketing also affects not just the SORM auto program, but we get challenged other risks that are brought to us from time to time that fall outside of the SORM program. Unique inland marine issues and things that we can't get. I mean, Christy sees this as a one-stop shop, so we have to step up and play. Well, we help SORM with the marketing of the program. Partner side by side. We've seen several of you repeatedly throughout the 3-4 years that we've been on the road, fifth year actually, for the marketing and renewal presentation. So we hope that's a learning experience, and hopefully you've learned something each time we've engaged as a broker and with SORM to help renew and provide renewal information and explain the process. We don't want it to be a mystery. It's a process. It's just a process. And new business quotes proposed. SORM has they want to grow this program. Agencies, their clients, they thank very much for supporting the program. So those that aren't clients, we really stress, please submit. Let's talk about how what the benefits of the SORM program are, and how SORM, the auto program, benefit and add stability to your budgeting process. As Christy said, each loss is charged back to you, even though the Office of Attorney General may be settling those claims on your behalf. So, the purchase of the SORM auto policy has many advantages, one of which is budget control. We operate as an extension of the SORM risk management department. I think you've heard a lot of that in the above bullet. We provide insurance market intelligence to SORM. SORM wants to know that they've got the best product in the market, and we provide market access to them. So we have annual stewardships and periodic communications with them that to help them understand what's going on out in the private sector marketplace and also the regular public sector marketplace. Because some of these rates that they have are even below what cities and counties and school districts are taking in the marketplace today.
So basically, I just want to really hit it home with you guys that it takes several different people, groups of people from different areas to come together to really create this program for all of you and make it work and make it, fulfill all of your needs. So I want to talk about the program features that we currently have. Of course, I mentioned you negotiate policy terms and conditions that are specific to state entities. One of those I know is the expanded definition of the insured. And this has been something that I know we still get questions on regularly. Some of our institutions of higher education allow students to drive state-owned vehicles. Some of the other agencies that we work with have volunteers that drive state-owned vehicles. Well, according to the Texas Tort Claims Act, those individuals are not protected. So that opens up another, whole different can of worms, basically. But with our program, with the insurance coverage, we are able to pick up those unique risks that are not, where there's no immunities offered by the Texas Tort Claims Act or as an employee of the state of Texas. So. Our program has composite rating, and what that means is it goes back to the purchasing power. It goes back to pooling together, grouping together similar risks with similar exposures. Yes, Mary?
Okay, you said the volunteers and the students are covered, or they're not? Do we have to do something special for them to be covered? They are just generally automatically covered, or?
They are covered, and I do have a slide that shows the actual definition of the insured according to the policy contract. That's another thing that is important for you all to understand, because this is it's a real insurance contract. SORM basically is managing it, and we're acting as advocates for our state agencies, and we are basically, we're doing the RFP, we're taking all the legwork out of it for you, and we're making sure that it's everything that you need and more. But we do we have identified, and we know that there are business operations that require students and volunteers to drive. Now, that being said, there is language in the comptroller's website, and I probably should have found it and put it on here, but basically it says that no one other than a state employee shall drive state-owned assets. And the reason for that is because there's no protection for them. And so you'd be accepting that liability for them. However, if you are already purchasing the insurance policy for the liabilities that exist for the state agency, the volunteers and students are it's just wrapped into that same nice package. So it's just part of the program. Now, each of you have, you can set up your own policies, your own driver safety policies and procedures, and you can determine what your risk tolerance is. I know some agencies say, don't tell anybody from my agency that that's on there. I don't, I'd rather them not know, and that's okay too. Just understand that the coverage is there for you if you should need it. But whatever your operations are, you need to make sure that your written, established policies, your driver safety manual, your fleet management manual, make sure that that is a real reflection of your business operations. Because if the need is there and the coverage is here, make it happen. If it's going to do good for your agency to have them have the ability to put them behind the wheel to do work on your behalf, then I want you to be able to do so comfortably and know that we have your back. Okay? Composite rating, basically that's just the way that the insurance company looks at risk is they identify similar risks. So as a state agency, even though you're each unique, you each have your own different business operations, different exposures, from an underwriting standpoint, you're grouped together because you're all protected by the Texas Tort Claims Act. A very small amount of your business operations will not be. And so because of that, they're able to rate you at a rating that's much lower than what you'll find in the private market. Do you want to add anything to that?
Well, the composite rating makes it a lot easier for states to understand how the premiums are computed. If you were to pick up a commercial auto policy for a delivery company that operates in Austin, you would have a problem trying to figure out how we started for this number, for this number. So we make it very easy on renewal and new business presentations to understand how do we compute to the premium, how do we get to the premium based on these number of vehicles and these vehicles and how they're classified.
And I think it's also important to know that during the RFP process, when we're evaluating the brokers and what they bring to the table and what carriers that they've negotiated with, these rates are set at that time. So right now, the current program has we're locked in for the 5 years of the RFP at that rate. And that's not possible in the private sector.
Raise your hand if your private auto rates have been frozen for the past 5 years. That's what I thought. Okay.
So that is a very important aspect for you all to understand. And that's part of our job, protecting you, advocating for you. You know, we establish the rate. It's based on what your exposures are. It's based on the unit types because they break it down per unit. And different units, there are different types of risks. So, but basically, once they have submitted those rates to us through that RFP, once they're awarded, you know, that's it's our goal to keep them at that level.
Christy, that adds budget control. And so you don't have to go with a 5% increase every year on that particular expenditure in your budget. One of the many advantages of the program is budget support.
And I have to say very quickly that One Beacon is the only carrier in any of the insurance lines that we have that has done this for us. All of the other insurance firms that we have not been successful in issuing flat rates every year. Maybe 1 year of the RFP, but not all 5 years straight. So Dave, I'm sure from myself and all of us here, we thank you for your efforts with that. So if you have a rate increase in your auto premium, it's most likely because you're growing organically. You're adding more vehicles, you're adding different kinds of vehicles, you're adding additional coverages that are optional. So just keep that in mind if you're the one that's responsible for your fleet or for deciding, you know, what gets covered and what doesn't. That the rates per unit are fixed. So, and we are going to do everything in our power to, you know, continue that process and make it happen again in the next 5 years. There's no auditing in our program. There was previously, as a matter of fact, there was at the beginning of 2009. If you all have ever experienced the audit process, it's basically, you know, start your term with one schedule of fleet, and as you make changes at some point during the year, you turn that in, and the underwriters go back and re-rate you if you had more fleet than you started with. And it's really, in the end, it's a wash because most of our agencies typically will, you know, do replacement vehicles rather than additions. The policy actually now includes language that automatically provides coverage for newly acquired units. We do have an established threshold that indicates if you have, it's a very generous threshold. So as you're making changes, adding, deleting vehicles, as long as you don't add more than 10% of your entire fleet or vehicles valued at $100,000 or more, you don't even have to report it to us. We expect you all to do self-reporting or self-maintaining of your schedules. We work on the honor system, and we hope that you know, should you exceed the threshold, and those of you who are in the program would have received all the notations about that, but you're only going to have to report it basically if you exceed the threshold. Now we at SORM do a semi-annual report. We ask that of our participants so that we can review the process. Everything that we do, whether it's auditing or not auditing, we're constantly evaluating the process, making sure it's working for our participants, making sure it's working for our carrier, because we have to strike a balance. We don't want to overexpose our carrier and risk them not being able to pay claims, but we don't want to not provide a service to our participants. Providing flexibility. Again, we picked up a lot of risk that you would never find on a standard commercial auto policy. And I say that because when I was in the private sector, I was told no all the time when I asked for different things to be covered. And so, now with the SORM program, I pretty much get whatever I ask for, I think. Yeah.
She does.
So it's really nice, and you all should, I can't express it enough how well this program is designed. And of course, the program reflects the Texas Tort Claims Act limits. We also have a dedicated claims processing, and that is for, we've set up different levels with claims processing. So right now, claim takes place, we have an auto claim reporting form, you send in the SORM simultaneously to one beacon, they have the claims number, adjuster information, so you've got that as contact. You're typically contacted by the claims adjuster within 48 hours, and the indemnification process starts. If the agency employs at fault, then they get a hold of the third party, they start to resolve. It happens fairly quickly. If one beacon has the information they need, then everything is taken care of very quickly. Most of our claims are closed in under 30 days. So, and depending on the severity, I've even seen some closed in a week. So it's a very good process. If anything's happened, anything doesn't go right, SORM is there to assist you. I also monitor as the claims are going back and forth. I typically can try to head something up if I see maybe information's missing on the report form, or I know the adjuster's going to need this other information. I'll try to get involved. But we're always here for you if you do ever have any claims issues. And actually, in the past, when any issues have been brought to our attention, we've been able, through our stewardship meeting with One Beacon and our broker, we've been able to enhance the process even further. So, and that's important for you all to understand. Everything you all do, anything that you all need, any inquiries, any problems, don't ever think that it's not okay to tell us, because that's how we improve. And we expect the same thing from our carriers and brokers as well. This right here, the multiple vehicle types and trailers and motorized equipment, this stuff you typically would find on a general liability policy and not on a commercial auto policy. In the private sector, when I wanted to insure backhoes and mowers and things like that, golf carts, it had to go on a general liability policy. But because of the uniqueness of the state, the purchasing power, the flexible underwriting and negotiation effort, we're able to put this on your auto policy. So that's important, because the Texas Tort Claims Act includes all mobile equipment, motorized equipment, as part of the limited limits. Help me out here. Limited waiver.
Yeah, there's some
right?
Texas ordinance, so motorized vehicles, motorized equipment.
Yes,
So does that mean our golf carts and stuff are on our?
they can be if you schedule them. That's right. Now, whenever I'm up here talking about all this coverage, and some of you are participants and some of you are not, I'm referring to the information that you give us. We can only give you as good of coverage as the information you give us. So if you are electing to insure a part of your fleet and not all of it, or maybe you don't count golf carts and mowers and things as part of your fleet, it's important for you to know that they are eligible for coverage under this program. But if you don't provide the information to us, then we can't insure it. So there is schedules that everyone should have if you're a participating agency, and if you're not, It's something you will have if you have fleet, and that information can be added on there. Actually, I'll get to the application. So I just wanted to give you guys a sample of some of the, other than, you know, these are your non-standard autos. We've got customized vehicles up at the top with the, is this thing pointed right there? Okay. So customized vehicles on your standard commercial policy are typically limited. All these customizations, the lights, all the electronic equipment inside, GPS, you know, computers tracking, all that kind of stuff. Those on your standard commercial auto policy will have sub-limitations, and if you were to have a total loss in this vehicle, you would not get the full value of all of those customizations. However, under our program, we have enhanced and expanded coverage for customized vehicles. So I want to point that out. Golf carts, I've got some backhoes here, bus, utility vehicles, mowers. This is a street sweeper. That's a Bobcat, yeah. Even semis. And we do have, and these are, this is a sample of what we already have on our book of business now. So these types of vehicles are currently being insured on our automobile program.
I just wanted to give a note on the claims reporting, because I recently had to file a couple of claims. From the moment I sent the email to the moment I actually got a phone call from 2 different adjusters, which is rehab. And
That's great to hear.
yeah, oh yeah, that was very responsive. The emails were instant, phone calls were just very short time after that. I was impressed. Yeah.
We really do make every effort to make it easy for you. You have enough on your plate. Let us be that resource. Let us take that load. That's what we're here for. That's what our program does. So Donnie, has anyone else had any claims issues? Anybody else want to give a testimony?
Gotta wait till Dave comes back in the room.
Okay. Okay, so I mentioned about the Text Tort Claims Act. Now this is actually pulled directly from our policy form. This is a part of one of the endorsements, and you read up top, this endorsement modifies. This is on every policy that's issued. So the SORM program, we have, you know, it's made for multiple participants, but each participant has their own policy form and their own policy number, and some participants have different endorsements. It just depends on your exposure. And that's why it's important to get with, you know, the SORM risk managers, to get with the SORM insurance consultants, so that we can make sure that whatever your exposure are, you are paying premium and getting the proper coverage you need. I want to point out the limitations from the Text Tort Claims Act. So the verbiage here is very clear. It takes it straight from the Text Tort Claims Act, what the limits are. And then just make a note here about claims that are not subject to the Texas Tort Claims Act. There's a $1 million combined single limit. So a lot of our agencies don't know that. They might not understand why the policy is actually written for $1 million, and it's endorsed that all claims will be subject to the Texas Tort Claims Act.
Give me an example of what would not be subject to this?
If you travel outside of Texas, possibly. Also with the volunteer who's not protected by the Texas Tort Claims Act. If they, you know, have a catastrophic loss, it's possible that $1 million could respond. So, and honestly, there are too many, there's a lot of different scenarios that there could be, and no one knows really until it goes to courts and the courts make a decision. And so, and we know, I went to REMA conference, Bob, you were there. We sat through one of the events, one of the speakers, and they talked about how there's an erosion of immunities in other states. It doesn't seem to be happening here in Texas, but in other states there have been cases that the courts have decided against the immunities, which is unheard of, I guess.
Well,
So,
certainly not public policy.
mhm. So you just never know. You never know, again, with the uncertainty. Yes.
So is this secondary to, you know, the comptroller requires us to rank cars through a certain program,
Mhm.
has coverages, but let's say they're in Philadelphia or Egypt, those coverages are $1 million. And
Right.
Some happens there, this will be secondary to that policy?
So right here, this particular coverage is going to be primary for scheduled autos or scheduled motorized equipment. So that means it responds first. So these limits will respond as primary when the unit itself is covered. In Texas, the insurance follows the financial responsibility law reads that the insurance is on the unit and then it follows.
Right.
So this would be primary on scheduled vehicles, scheduled motorized equipment, and then these limits would be secondary or excess on like your POVs and your rentals and things like that. And actually, you get.
So is there any limit to that as far as state or countries? The 1 million?
Okay, so.
So we go and we do a travel thing and we go off to eat and pick up the, Hertz rent a car, which is part of the state program.
Did you say Egypt?
Yes.
That's international.
Right. That's why I'm
Okay.
asking
Okay.
if you cover international or not.
Thank you for clarifying. Okay, so the policy terms are actually United States and Canada. Okay, international travel actually requires a different type of insurance policy, a foreign policy, because the insurance laws and limits and regulations are extremely different in every country, so there's no way that they would even accept, what we have going on here in Texas, so.
Mr. Dave, can you clarify the policy territory? U.S.
In Puerto Rico.
Puerto Rico is Puerto Rico.
And
Canada. Canada is a whole separate issue. Buy insurance in Canada. Buy insurance in Canada.
I might be
In
thinking
fact,
like
if you
personal.
travel out of the country, buy insurance out of country.
Yeah. Yes,
Mexico,
thank you for that.
we just had to deal with the Canada issues.
Okay, so is that clear? Yes, ma'am.
We don't have a fleet. All of our people drive their own vehicles and they're going to perform their duty. How does this affect them?
So when you don't have scheduled autos, it would be considered excess liability. Okay, so just to make clarification, so primary is on your scheduled fleet, scheduled motorized equipment. Excess is going to be basically all of them. So that's your hired auto, which are your short-term leases or rented vehicles. So rental, okay, the state has a rental contract with enterprise statements. So it's already included in your rental. This sits on top of that. So the rental agreements are for 100, 300, 100, and your exposure is for, if you go back, 250, right there, the 250, 500, 100. So if a catastrophic loss were to occur, you would have the difference between the enterprise insurance policy or the ABC insurance policy and these limits right here. That's what would be available to you.
Without the state, yeah.
Out of state, you would have $1 million. That's correct. Okay. Now, if you don't rent with the state contract, it's important that you do go ahead and buy that primary auto insurance that's available if you're not renting with the state vendors. And the reason is because, again, the way that hired auto, the definition of hired auto, when it's rented, it falls under excess. So that means that there would need to be some other primary insurance on that vehicle. Yes, sir.
Does this include rented mobile equipment, small equipment,
Yes, I asked that question before.
commercial vehicles, tractors, and
Now, is it a short-term lease? Because there's a different definition, and I believe in your case it would be. As a matter of fact, I recall helping the Huntsville location with something similar. But the answer is yes. They would need to have a primary policy unless you choose to retain that first level. So that's
If it's long-term lease, you can look like that on the vehicle. Short-term, you can schedule.
What's your definition of short term?
the underwriters have told me previously 3 months.
Is short term, anything more than that would be long term?
Right, you schedule it just longer than 90 days.
Any other questions? Okay, so the excess liability also applies to non-owned auto, and here's your POVs that you're referencing. So employees driving their personally owned vehicles would have the statewide insurance policy provided to them up to the Texas Short Claims Act limits, but it would only be the difference between whatever their vehicle insurance, their personal auto insurance policy is. So if they have a state minimum, it's like 30, 60, 30, I believe. So that would be the difference there. Interesting.
So just to be very clear, your personal insurance is going to be paid first dollar. This sits on top of that insurance.
That's correct.
Do SC employees need to be scheduled employees for that coverage?
That's a good question. Previously, we used to have all of the participants turn in the details of who they authorized to be drivers, and that included employees as well as volunteers or whoever they authorized, basically, because the policy provides coverage for permissive drivers. We used to have them turn that in. We decided that we didn't want to pick up risk for privacy issues with their license number and so forth, so now we no longer request that information be turned in. You are required and requested to maintain it internally. If a claim dispute takes place, if there's any issue with the claim, you would need to have access to provide details in the event of a claim, like when the employee was hired, when did they run the MVR, when they authorized to be a driver. So to answer your question, they do not have to be scheduled with us, but they should be maintained as authorized drivers internally. Okay?
So is a travel authorization enough? Because like you hire a faculty out of the East Coast, and when they carry their rental car, all that happened. Now he's going to be reimbursed for bringing driving his own vehicle. But you haven't even an MVR code shows up to HR.
I understand.
They would be covered.
Absolutely.
Okay.
You authorize them to drive on your behalf. They meet the definition of the insured according to the policy contract.
Yeah, because we've always looked at it as not even volunteers as long as we issue the DA or a student.
Going back to the POVs, I want to make it clear also that the way that I'm going to just keep forcing this on you guys. Go back to your established policies and procedures manuals, your driver safety manuals. Make sure that you have a statement, a position on employees using the POVs. It's also important to understand that because your policy is excess, that you communicate clearly to the employee that they must maintain their personal auto coverage, because that has been a nightmare in the past where an agency did not clearly advise their employees, and several employees canceled their personal auto insurance thinking that, boy, state employment, awesome, I'm getting my insurance paid for, I've got coverage for a 16-year-old driver, that's what my boss told me, gave me a certificate and everything. So it's extremely important that if you allow employees to drive their personal auto, that you have established policies, procedures, safety mechanisms in place to manage that risk. And that, yes, sir.
What happens when they don't?
That's a good question. A couple of things. Actually, we haven't had it happen. Well, I take that back. We did have it happen, but unfortunately, we did have it happen. The employee had an accident. They had canceled their personal auto under the assumption that their management, that it was being provided by the employer. The liability that was involved, the damage that was involved, was far below the state minimum limit, so it would have never touched this policy here. So unfortunately, I don't have an answer for how One Beacon would respond. I've asked that question to them before, and what I was told was every claim stands on its own merit. So they will take the situation and all of the factors that influence that event to take place into consideration. If, for example, in this case, the liability did exceed the state minimum limits that the driver was responsible for, and this policy was triggered, they would have provided coverage because it was the employer's miscommunication to the employee that caused them to cancel their insurance.
We have a statement in our safety plan that says you maintain Texas minimum standard.
Perfect.
Okay? They don't. What happens?
Violated the law,
Okay,
So-
I got people violating the law
and they
routinely.
violated your policy and procedure.
So it needs to be contingent on their employment with you, number one. Number two, the underwriter that I spoke with said that it could go one of two ways. It could go to where the state agency could be held responsible for that first X amount, the state minimum limits, because they are your employee, and ultimately, the policies here is going to protect you. Now, that employee is still going to get it, they're still going to get all of the repercussions for not having the liability, but your policy here, it is possible that it could drop down to pay from first dollar. But again, it's not something that we can guarantee, because like claims supervisor told me that every claim stands up to merit, and they would evaluate the circumstances at that given time.
So there's no real teeth in it until it happens.
Yes. Go ahead.
I was just gonna say that the employee could be liable for every dollar that.
Up to the state minimum limits, yeah. That's a good question. Are you Derek? I thought so. So, we have had that discussion, and I don't know if a final, we have some decisions on that. So let me just explain to you what he's talking about. So as a small state agency, you may have, a small group of employees that have to use their personally owned vehicle, and you may value the employees a great deal, and you may want to provide primary automobile liability on their behalf, but you don't own their vehicles. And so then it becomes a question of whether you have the authority to use state funds to insure what's not a state asset. So I can tell you that One Beacon has offered to provide the coverage through some certain procedures and things like that. But the State Office of Risk Management and our legal team, we have determined that there really is not an authority for the state agency to do so, to utilize taxpayers' funds in that manner. So I think at this point, Barbara, help me out anytime here. If you wanted to pursue it further, we'd probably have to get an OAG opinion, and there'd be a different process. But it was something that was explored, and I'm happy to say that One Beacon was willing to, make it happen, basically via endorsement or via, you scheduling them. But it was determined in the end that we didn't feel that there was the authority for the state agency to utilize the funds in that manner.
Yeah, I think we talked about it in some type of a lease arrangement with that employee, am I correct, Christie? And Barbara, I think you determined at the time that may not have been.
She was not allowed.
Oh, sorry, okay.
As an attorney, my first response is, it depends.
Yeah.
Big film here.
Spent a lot of people in law school, when did I say that? Big. So really the short answer is, there are always exceptions to every single rule. The short answer is, you don't have the authority to do that. The comptroller will put a stop to it. The fact that our excellent carrier is willing to offer that is wonderful, and we appreciate that opportunity, but it is not actually available to you. You are not allowed by state law to spend taxpayers' money on something that an individual has their own legal responsibility to obtain.
Ladies first. Go ahead.
Okay. What happens if you are one of the agencies that you don't have a state budget? You are
Use that
FDSI,
word.
that's like, can we still explore this? Is this still an option? Or
You're retaining the risk right now? Because if you're self-insured, you would have a budget line item where you have the money.
no, we don't. But
Okay,
this
so-
is something as a benefit to keep individuals that are doing the exams, as a benefit to them if we keep them as employed with us longer. This might be an incentive.
Now you're talking about the joining the program and having the excess level?
No, I mean,
buying insurance for your employees.
Right, just for the vehicle that they would use.
But you don't own the vehicle.
But we don't own the vehicles.
And that's exactly what this gentleman here was asking as well. And the determination was that states are not allowed to use funds in that manner to insure assets that are not owned by them or assets that the personal.
Right, but you said state.
She's working for a
She's not using.
I'm not using,
Oh,
I'm using our funds. You know, we have to do our own budgeting, we have to collect
okay.
our own money. We're not using state funds.
Okay.
You're in a unique situated
Right.
agency. There aren't a lot of you. I actually worked with the state 6 years before I knew you were busy. Because that is such a unique situation, I prefer to discuss it with you separately because it doesn't affect your business and your unique situation with the way your agency is written into the law doesn't apply to most of us. So if we could chat about that during the break.
Okay.
Thank you very much.
Okay, moving on.
I want to just one quick clarification too on the excess. We're only going to provide excess coverage if operating on state business. It's not a carte blanche where it's going to provide excess.
But just for state business
Only
only.
when you're operating state business.
Yes.
I mean, there's still going to be a need for that personal auto policy.
Right, but if we could enhance, you know, that more then.
Okay, I'm really running late on this. Okay, physical damage coverage is optional under the program. You do have to purchase liability on the scheduled vehicles before you can elect to have physical coverage on the asset itself. We have low deductibles, $500 deductibles, which again is unheard of in the private sector for a commercial policy. And we do have expanded coverage enhancements. This is just a taken straight from our policy. It's got the endorsement up here at the top. I just want to point out the who is an insured provision. And this is what I know is important to most of you. If you're with us, this is in your policy. If you're not with us and you'd like a copy, there's copies of this handout on the table so that you can take a look at it and get more comfortable with it. So basically, bottom line, participating in the statewide program creates an opportunity to transfer the financial burden of this risk to highly rated insurance companies or the state entities, budgeting and accounting projections, and it is a component of business continuity. So if you choose to transfer your risk, consider joining our program. To participate, you must be subject to the labor code that guides us. You complete the application and binding process, comply with our underwriting management requests, and comply with the insurance policy terms and conditions. This is our website. Just want to point out where you can get an application and the schedule for fleet. And then you just basically send that in. Easy application. All the questions are here. I've got copies of this on the table as well if you'd like to take a look at it. And if for nothing else, if for no other reason, get a quote for to do a risk evaluation. Use it as a way to determine whether this is something feasible for you or not. It's just good practice. And right now I'd like to hand it over to Dale for the last 10 minutes, I guess, of the Mexican auto. I'm sorry, guys, I ran too long on that. But, if you let me know, I'll highlight your name on the sign-in sheet, and I'll know who to send it to electronically.
Okay, good morning. Met some of you again. My name is Dale Sharpjenkins, and I'm one of the owners of the Agency Incorporated. We are an independent insurance agency located in Arlington, Texas. My business partner is my husband, Jeff, and last year we celebrated our 30th wedding anniversary and our 15th year in business together. Thank you. We are, the Jenkins Agency is, we are the top 10 of African American owned independent insurance agencies in the country. And if you would like to see us stay in that position, we encourage you to join us. The Jenkins Agency is, we consider ourselves a three-legged stool. There are three things that we primarily do in our agency. One, we are just an independent insurance agency. We write retail insurance. We write all lines of business. We are 90% commercial insurance, 10% on the personal lines. And so we follow all the TDI standards, and we operate like any other independent insurance agency. The second thing that we do at the Jenkins Agency is an organization that we established in 2010 called Participation Partners, Inc. And Participation Partners, Inc. is an online community for small, women-owned, and minority businesses to go online, create a profile about their business, and we bring together the small business, the minority and women-owned businesses, and we connect them with agencies and prime contractors so that they can have, so they can get together and have business opportunities to work together on different contracts. As a matter of fact, the state of Texas just put their Hub Expo seminar on our Participation Partners website. So the idea of Participation Partners is to bring together small businesses, minority-owned businesses, and larger prime contractors and state agencies for the purpose of contracting together. So if you want some information on Participation Partners, there's a handout on the table also. And it's a great place to go if you have contract RFPs and you're looking for minority businesses to participate. Go to Participation Partners and you'll probably find one that can help you out. The third leg on our stool is the reason why I'm here this morning. We do consulting, and we work with organizations like Wells Fargo and provide services to the public sector. On this particular contract, our agency takes care of the Mexico Auto Program, and you all were talking earlier about going to Egypt. It's probably more likely that you might go to Mexico, and so that's why they felt it was important to have this part of the program. Right now, there's not a lot of travel to Mexico. There was when we started, probably will be again. So there's a couple of things that you need to know when you're going to Mexico, just like in Canada or any other country. The laws are different in Mexico. So we have a policy that we can provide you for your travel to Mexico. The policy is written through ABA Seguros Insurance Company, and you have different options. That company is really a part of ACE, and it's an A+ best rated insurance carrier. You have different options on the limit. You can get a $100,000 policy or a $500,000 policy, and it's basically a liability only policy. And is this doing things? Maybe it's because I'm looking at it. I'll try to keep it steady. Okay, but it's a liability only policy, and it provides coverage for you or your employees or volunteers when they drive into Mexico to conduct business. It's important that the state have this in place because Mexico only recognizes insurance written on Mexican insurance policies. So any policy that you have written in the States, once you cross the border, that policy is no longer recognized, and it's no good unless something has been done to the policy, like endorsement has been placed on it. So whether it's your personal auto or a state-owned vehicle, once you cross the border, you have to have the correct coverage in place. And that's what we provide on this program. Just very quickly, a couple things that you need to know about having an auto accident in Mexico. It's handled a little bit differently than here. Once you have an auto accident in Mexico, you can't leave the site, the scene of the accident, until the authorities come. And right there at the site of the accident, they will determine who was involved. And you have to show financial responsibility. And you show financial responsibility either with an insurance policy or cash. And so if you don't have an insurance policy, officials are going to ask if you have cash in order to cover the damages that you just caused. And if you don't, then they take you to jail. And so you don't want to find yourself in jail in Mexico because you don't have the right insurance in place, or for any other reason, actually. So you have to have a policy in place. They've also asked you to give a statement right there on site. And if you have talked to anybody in the insurance claims area, they're going to tell you, in this country, they'll tell you, don't make any statements at the accident site. Just wait until the adjuster can handle it. Well, in Mexico, you have to do a statement. And that's why your insurance company says the first thing that you do when you have a claim is you call into the insurance company, because they will come to the scene of the accident and they will be present with you prior to making a statement, so that you can feel comfortable that any statement that you do make to the authorities, the insurance company has had a chance to talk to you, visit with you, and be present to hear the statement that you make. So if you have an accident in Mexico, you need to stop, call the insurance company immediately. Don't say anything until your adjuster comes there, and they will come to the scene of the accident because they know that everything has to be handled in that manner. There is a toll-free number. If you purchase the Mexico auto insurance, you will get a packet that you take with you. And just like whenever you travel in any foreign country, they recommend that you make copies of all of your material for policy and all the information. Make sure you have a copy, make sure somebody in the States has a copy, just so if something does happen, you can get that information pretty quickly. Okay, so we've made it pretty easy for you to purchase an insurance policy. You go to our website. It's the JenkinsAgencyIncorporated.com, and you click on SORM. There's a button there that says SORM Customer Service. You click on that button and it takes you to this page here. And when you get to this page here, you just fill out all of your information. And once you fill out your information, within 30 minutes, someone from our office will contact you, and they will get additional information like your social security number, date of birth, and more personal information. We don't collect that online. So Rosalind and Troy will give you a call, and she will give you additional information that you need, and then you'll get your policy put in place. We just ask that you try and let us know at least a week in advance of your travel. But if you get down to the wire, you've got to go, and you don't have a week, we can still work pretty quickly with you in getting a policy in place. So it's a pretty simple process of getting a policy. And like I said, right now there's not a lot of travel going on in Mexico, but that could change. Hopefully it will change, because if that changes, that means the good things have happened. So
It's per day, right?
yes, it's per day. The policy is written on a per day basis. We have agencies that is available also if you're doing a lot of travel to Mexico. But if you just do 1 day or 2 days, you get a 1 day policy. The policy is only for liability only. For driving a state-owned vehicle, we can place physical damage coverage on the policy as well. Because once you drive a state-owned vehicle across the border, there's no physical damage coverage or liability coverage on that vehicle. So if it's state-owned, you can purchase physical damage coverage also. But if it's a personal auto, there's no physical damage. We would only place the liability portion. Yes, ma'am.
So, is the United States policy and all on board this primarily on privately owned vehicles?
Yes. Privately owned vehicles, if it's a state physical damage, but we have liability if it's a personal vehicle as well, and it would be primary.
saying in one of our past members, she goes there and then that university gives her a car for the week. And we saying that you have to know to make the model and all that is a way different from without, or the next University of Mexico, they're covered.
Who gives her the vehicle?
University of Mexico.
Okay, and so they have coverage down there?
I don't know.
That would be the question to ask.
Because again, they're like the state, they're a federal agency, I guess, they're right.
Yeah, well,
But she's an American driver.
yeah, this coverage is attached to the vehicle that's traveling across the border, liability for the vehicle traveling. If you're picking up a vehicle there, I would think that the university there would have coverage in place for that vehicle. But it would definitely, well, as a permissive driver, but you would want to make sure that she's covered as a permissive driver for that vehicle. Again, it's a liability policy, so if the driver, the state employee or volunteer was responsible for the liability, the liability for bodily injury or property damage is covered under the policy.
And of course, the employee or state representative for the injury will back to me. If it's an employee of the workers' compensation, if it's not, then hopefully the agency has an accident, voluntary accident policy or something like that.
So is it only like 500,000 because medical costs in Mexico are so cheap, or is that adequate?
Well, it is adequate. We used to write lower limits, but there's been recent changes in the laws in Mexico that where the minimum amount that's allowed for certain bodily injuries has gone up. And so whereas we used to write smaller limits, lower limits, we now recommend, because the insurance companies recommended, I may have said 100,000, but they're recommending 300 or 500,000 in limits right now. And that is a recommendation from the insurance company because they feel like that's an adequate amount. Thank you.
I apologize for this presentation running a little long. I thank you for your patience. We're going to take a quick break and then we'll set up for the panel discussion.